We slip into a break, we come back and focus on what to expect from the markets and also how to interpret the earnings season. Jagannathan Thunuvunthala, equity head at SMC, will be joining us in a short while from now. Welcome back. Let's welcome in a special guest. Jagannathan Thunuvunthala, equity head at SMC Capitals, is with us from Delhi. Jagan, good afternoon. Thanks for joining us here on Profit. Let me first flag off how you are looking at the earnings season. We've been talking about it for time and again now, but just ahead of the numbers, we are seeing some major pullback rally in the IT space. But how are you reading into this? Are there going to be any major surprises, both on the positive side or on the downside?
The earnings seasons for sure, Ashu, I'm sure they will be good because from the GDP point of view, IIP point of view, at the macro levels, I think Indian performance has been fantastic. So there is no reason why not to believe that we will continue to do well. So surprises point of view, I think more pleasant surprises maybe more than the disappointments. I think disappointments only at best maybe to be in line with the market. That may be the only disappointment. Otherwise, it should be fairly good earnings season. But only problem is all those factors have been already factored into the capital markets, because if 1,000 rupees is the Sensex expected EPS for 2010-11 financial year, then probably this quarter probably we will be factoring in about like 250 rupees Sensex level EPS. I think more or less all the constituents will fall in somewhere in that range.
Jagan, how are you reading into the IP numbers that actually came out? 11.5 was way below what the street was anticipating. I believe 16.5 was the consensus estimate. But even the policymakers are saying, okay, don't read too much into this dip. They don't expect IP numbers to be bloated to elevated levels. Do you think this rationale is okay, justified, and we could actually see IPs normalizing to about 11.5, 12% odd levels?
Yeah, Indian economy has been running quite fast. I mean, so after a while it has to get moderated at some point, and moreover even the base effect is started showing up. I think net I think we have to live with the fact that now we will be getting into relatively moderate numbers, but that is not bad. Even from the sheer number point of view, 11% IIP number itself is quite good considering the way the other countries are doing. But now probably this will put RBI in a dilemma, because as the inflation is going out of control and then growth is getting moderated, so they will be in a double-minded whether they can be so aggressive with the policy tightening. But if they don't, with a reduced growth and with increased inflation, can be really punishing to the economy.
Jagan, let me focus back on the earnings picture here. Infosys details numbers tomorrow. Any particular thing we need to watch out for? Guidance the street is anticipating could actually be bumped up slightly, but do you think there could be considerable pressure on the margins, especially on the back of cross-currency movements? And this is going to be a general norm, do you think, for most of the IT majors, especially the tier 1?
Yeah, I think the companies, I'm sure IT companies will deliver well. On top of that, even this quarter has featured with rupee depreciation, which also should help them in their margin, helping their margin betterment. As far as performance-wise, I think they have been doing well. Maybe barring some European concerns, I think there is no reason why not to believe that Infosys should do well. They, of course, as their normal practice, they may come with a slightly moderate and subdued guidance. That's fine, but that is their habit, under promise and overachieve. So from that angle, tomorrow probably they will get into similar mindset. But I think overall it should be. And moreover, Infosys I think is at 52-week high now. I think there was some anticipation before the earnings. Unless there is a very major disappointment tomorrow, I think one can assume that the momentum may continue.
So do you think the best is already in prices? If the company revises the guidance upwards, says that order inflow is on track, margins aren't too much of a concern, we could actually see the stock taking a cue from those comments, perhaps moving further? Or do you think the best already is right now in prices?
I think that is true both for Infosys as well as to the markets, Ashu, because I think as we have been doing, the economy has been doing well, but those factors have been factored into the markets. The same is the case with Infosys. Of course, as they say, never argue with the tape, run with the momentum. So as the momentum is good, I think that can take the share prices a little higher. It seems that after IPL and football is over, now the traders are back into the business. It seems today we have hit the 52-week high. So I think momentum may take the share prices a little higher, but one has to be a little careful before really opening up and building up the aggressive portfolios.
So for the rest of the earnings season, ITS side, which other sectors are you looking at? Does infra figure prominently in your sector-specific view? Could we see some major outperformance this time from the infra space for the likes of L&T, Punj Lloyd for that matter, has been subdued? Do you think things are picking up for the infrastructure space?
As far as L&T, barring the last quarter before which there was some execution related risks and there was some slippage of order book converting into the actual turnovers. But last quarter was fantastic for them, so I think this quarter also can be expected L&T should be good. But Punj Lloyd strangely is in a neither here nor there kind of zone, and I think almost for last 3-4 quarters they have been under pressure in terms of margins and execution slippages and etc. etc. So probably this quarter they will have an extraordinary item of sale of their sale in the Pipavav shipyard. So there will be some profit because of that sale. But otherwise these two, I think they will be in line. They may not be major surprise as such.
All right, let me take a slight detour, talk about Engineers India. I believe the FPO is just around the corner. It opens on July 27th and 10% dilution of the government stake in the company. Jagan, again, it's going to be interesting how the primary markets react to an FPO at this point of time. The recent listings, the recent issuances haven't really seen a lot of participation. So how do you see this one panning out? Do you think there will have to be some major perhaps discounts being offered?
Definitely, the discount to the retailers and employees is anyway guaranteed 5%, that is there. And one more point about this Engineers India or Hindustan Copper is, Ashu, is that the share prices at which they are trading are slightly higher because the float in the market is relatively on touch lower side. So one has to understand what will be the pricing and etc. But the overall, for the primary markets, I think the markets are relatively subdued. That has to be seen. And moreover, at the same time, there is SKS Microfinance IPO also, because they have got the SEBI clearance and even their issue will be opening on July 28th. So there will be competition between Engineers India and SKS Microfinance, because some segment of investors have a lot of fancy towards this microfinance as a theme. So that's why some money definitely will go in. Even that's not a small issue, it is also running into 1,000 crores. However, even that SKS Microfinance issue also aggressively priced, touch on the higher side. But net it will be fascinating to see there are two relatively high profile issues around the same time. But these two issues, if they are opening, one thing is clear, Ashu, the message is loud and clear that people are not very confident about the sustainability of the market levels. So they want to come with the IPO as soon as they can, because they don't want to take the risk of the markets taking a knock. So these two issues, I'm sure, will be fascinating watch.
And how did you read into the recent issue that closed, Hindustan Media Ventures? Again, there was a lot of jitters, especially towards the last day, wherein the stock, the company did see some good subscription numbers, but happened only on the last day. QIBs was very, very subdued. Retail didn't participate at all. Do you think there is a similar norm that we have seen, the similar trend we have seen, valuations aside, until and unless there is something on the table, you may actually see a lot of these IPOs getting very, very muted subscription?
One thing is sure, Ashu, these issues are going to get now, thanks to the new guideline that FIIs and the QIBs have to put in the 100% check along with their application. I'm sure whether it be Engineers India, whether it be SKS Microfinance, the demand is going to come only on the last day. Gone are those days where you will find the flash news, the first day, first minute, the issue got subscribed 10 times or subscription, etc. That wave and those days are gone. Now it is why should any institution should put in their application on the first day by losing the interest cost of the 2 days when there is no first come first serve kind of situation. So I think this is going to be a trend. I think the investors have to be watching on the last day. I think the issue period has technically reduced to single day now.
Let me take a slight bit of detour from that aspect, talk about the interest rate situation here. I was referring to the point you made earlier on the IP numbers and how it becomes difficult for the RBI to take any further steps on perhaps tightening the interest rate situation? We've already seen a 25 basis point hike earlier. There was expectation that on the policy meet or just ahead of that we could see yet another price hike, yet another interest rate hike coming in, just about 50 basis points. Or do you think now the situation becomes much more murkier? RBI may have to look at the subsequent implication on the economy, on the inflation front, on the IIP numbers. Multiple aspects have to be discussed.
Yeah, of course, these IIP numbers will put the RBI in dilemma for sure. But having said that, inflation is much bigger concern, Ashu. I'm sure 25 basis points is almost a guaranteed, maybe on July 22nd or even before that. If that doesn't happen, then RBI probably may put itself in a situation of lagging behind. For example, inflation, double-digit inflation probably in all the emerging economies, probably we are the only country who is facing it. China is much better placed because their inflation is 3% with 12% growth rate, and we are with 10% inflation and 8% growth rate. So I think definitely in controlling inflation will be the most critical target before RBI. Today's IIP may raise little bit doubt in the mind, but I don't think that doubt is sufficient enough to stop them from hiking the interest rate.
All right, Jagan. Thanks for joining us on Tips for Tomorrow and helping us understand how to interpret the market moves and also various other aspects that have been of recent occurrence in this market. So